Hi, this is Mr. Evans. This video is going to look at a question that's linking two different parts of the specification. Always helps when you get a question to really understand what the question is looking at, and the way you can do that is break that down into the instruction for the question, the focus of that question, and what the context, the business scenario is that it's asking you about. So this instruction is discuss the extent to which is AQA speak for come to a conclusion or evaluate. Other words might include justify, and bizarrely enough assess could be used as a trigger to show that you need to show evaluation. Of course, because you should know the structure of the papers inside out, you'll know when the evaluation question comes, and you can look at the tariff for the questions as well as a hint to know when you are expected to put in the conclusion. The focus of the question is the part of the specification that you need to be aware of. What knowledge do you need to answer the question? This question is discuss the extent to which switching from labour to capital intensive production is the best way to increase market share in a competitive market. So what are the bits of the specification you need to be aware of? Well, the first bit is about optimal resource mix, as it's called in the specification. That is production labour or capital intensive, and that's the optimal resource mix is kind of titled in the specification, and we're linking that to market share and an increase in market share. So how can we move from labour intensive production, where you use a lot of humans in the production process, to capital intensive production, increase market share? And is there a context? Yes, there is. It is a business in a competitive market. So when we're trying to make sure our answer is focused on answering the question, we need to ensure that we kind of cover all of these bases. It should be really clear to the examiner that we're talking about a business in a competitive market. Now, these two comments here are taken from the examiner's report. This is a question, and it's from the examiner's report 2017 about the 25 mark questions, of which at A level you have a choice. This video will still be very useful to students doing AS exams as well, because these are both AS concepts. The students who selected this particular question showed excellent knowledge and were able to develop some high quality arguments to demonstrate the impact of using this approach on the business's market share. In other words, the answers to a question used, the good answers to the question were used excellent knowledge, they developed high quality arguments, and it was fully linked to the question, which in this case is about market share. A second comment from the examiner's report is a feature of some responses to this question was the excellent insight offered into different contexts to support arguments. So using different business scenarios, different business contexts to support arguments. And we'll have a look at how we can do that with my answer. Now, one thing that I've talked about in these previous videos is how the examiner expects you to kind of have a plan for where you're going before you start. So I always bullet point plan what I'm going to write, and it tends to make me use the time more efficiently. A lot of students say, well, I don't have time to plan. Well, quite frankly, if you don't have time to plan, you're likely to produce a worse quality answer than you would if you took the time to write a quick plan before you started, as that would help you focus your thinking. So here is my answer to the question, and of course the question is, discuss the extent to which switching from labour to capital intensive production is the best way to increase market share in a competitive market. So how do I start off? Capital intensive production occurs when the majority of a firm's production costs are spent on technological inputs to the production process, and it is characterised by highly automated production lines producing standardised goods. Okay, so this first sentence here is a definition. Now, AQA says you don't have to start with a definition, but you do have to clearly explain you know, within your answer, you should make it clear that you really understand the concepts that are being tested. I've put my definition at the start of this paragraph, because this is the start of my chain of argument. This is the start of my analysis, and it's very clear right from the beginning of the answer that I understand what capital-intensive production is. Moving from labour to capital-intensive production would tend to increase output and tend to lead to an increase in output and a fall in average costs due to the exploitation of economies of scale. If the average cost of a product falls, a company in a competitive market may decide to cut the selling price, as they can still make a margin on each unit due to the lower costs of production. So what I'm telling the examiner here is that I understand that capital-intensive production is usually associated with, mechanised production lines. Therefore, we can increase the output that we produce. If we increase output, we benefit from economies of scale, cutting our average costs. And when a firm cuts its average cost, it's got two decisions. A firm can either continue to sell at the same price and make a greater margin on each unit, or you can pass those cost savings on to your consumers in the hope of gaining market share. So why would cutting the price of each unit, cutting the selling price, as I've mentioned here, why would that be good in the context of this question, which is increasing market share in a competitive market? This could be a good way to increase market share in a competitive market, as demand for products which have a lot of substitute goods tend to be price elastic. So demand is price elastic when there are a lot of substitute goods around. So what does that mean? Meaning that consumers should respond to the fall in price by switching from their current provider and therefore increasing the company's market share. So you can see that I've got a good chain of analysis here that starts right at the beginning of the paragraph and develops itself through the use of a business theory, price elasticity of demand, and is clearly linked back to the question. However, is it suitable for all businesses in a competitive market? Well, switching to more capital-intensive production would be most suitable for businesses producing mass-market standardised products that require little customisation, because it can be difficult to adjust machinery for individual products. So I've put a bit of evaluation at the end of this paragraph by saying, is it going to be suitable for all businesses? Well, it will be most suitable for mass market standardized products. Okay, I'm trying to get in here a different context, all right? I haven't named any companies necessarily, and one of the things that came out from last year's exams is that to show context, you don't need to name a company, but this is a business scenario that you could use to back up your argument about why capital-intensive production may increase market share. Okay, so now I need to have a look at the other side of the argument and introduce some balance. However, switching from labour to more capital-intensive production will not be beneficial to all businesses in competitive markets. So I've made a really clear statement here at the beginning of my paragraph that I'm going to develop. Labour-intensive production is associated with greater responsiveness to individual customer needs. Some competitive markets, like the market for tailored clothing, require labour-intensive production so that products can be individualised to each customer's needs. Okay, so I mentioned customer needs a couple of times, it's probably not great English, but you can see that I clearly understand the benefits of labour-intensive production. And I've given a business scenario, the market for tailored clothes. In such a situation, the experience, skills and flexibility of staff, which is called the human capital, becomes a unique selling point and allows the company to build a reputation for the quality of their products. This could lead to an increase in sales and therefore the market share of a highly labour-intensive company. So I've said that in some situations, the staff they become the company's USP itself. And if we're going to get rid of the staff, then the reputation that some companies have for quality products may fall, and therefore it's going to reduce sales. Have I said that? In such a situation, the experience, skills and flexibility of the staff becomes a USP and allows the company to build a reputation for the quality of their products. This could lead to an increase in sales and therefore the market share of a highly labour-intensive company. Yeah, so in some scenarios, It's the experience, skills and flexibility of the staff that is going to enable that company to increase its market share. Therefore, getting rid of those staff because you've replaced them with machinery is not going to be beneficial and won't increase market share. In addition to this, so now I'm making another point, customers in the service sector tend to prefer human interactions. For example, it may be inappropriate for a restaurant to switch to capital-intensive production because the reputation of the restaurant relies on the hospitality skills of the waiting staff and the creativity of the chefs, skills that are innately human. Switching to more capital-intensive production in such a situation would likely lead to a deterioration in service levels and a fall in market share. So I've given a couple of business scenarios here. Number one, when manufactured products need to be individualised. Number two, the service sector, particularly kind of restaurants and things like that. And I've said that maybe more capital-intensive production would not lead to market share rising in those situations. So I've looked at both sides of the argument, given a number of business scenarios to back up my points, developed different chains of argument, and now I need a conclusion. So, in conclusion, switching from labour to capital-intensive production may help an organisation increase market share if they're manufacturing standardised products. This is because efficiency savings could be passed on to customers in the form of lower prices, attracting more sales and increasing market share. Okay, so a clear summary of the points that I analysed. However, businesses that rely on the quality of their human capital as a source of USP rely on the skills and experience of their staff to build their reputations and therefore increase their market share. So what I've hopefully got into this conclusion is a clear answer to the question with a little bit of balance. To be honest, it's not the best conclusion I've ever written in my life because it seems a little bit repetitive even to me. Perhaps a better way of doing it would be to think about the short-term and long-term implications of switching to capital-intensive production. A better conclusion might be something along the lines of, in the short term, switching to capital-intensive production may increase the costs of installing machinery, training staff. There may be costs in terms of lower motivation of staff, but in the long run, businesses in a competitive market need to be price competitive. You could make that sort of argument. But hopefully, despite the slightly repetitive nature of my conclusion, I would imagine that this would be top band or thereabouts. So I hope that was helpful, including a little criticism of the conclusion that I wrote in Time and Conditions.